Okay, so last week we passed two funded accounts of 50k challenge each, and today we took our first trades on them, one being a loser on NQ and the other being a win on ES. And by the end of this video, I'm gonna show you how you should behave, how you should trade when it comes to your first trades on these funded accounts you pass. Right, so to detail you first, the NQ one, okay, you can see we're going for longs for a reason. Right here we have these equal highs. Just to show you the trade as well, here is the funded account with the balance of minus 540, something like that. Okay, so as you know, we already detailed this. We're going from one liquidity to another, people trying to perhaps trade some shorts here on this order block, which is ultimately going to fail, and it's also equal high, which is being relative equal highs right now as well. And we're consistently looking for shorts in this area. You see, like, price didn't do like a simple move up, which could have been tradable, could have been not. It's giving us multiple tries here, which could be good, could be bad, because some setups might not move as much and give us some break-evens or even stop losses, but it's multiple tries for us to go for longs until that liquidity, which is, as of solely as a target, it's pretty good, just for the confluence of consistently looking for longs. Then as we come here, right, you go into the day, you check for liquidities. We're moving pretty close to the target right here, which we're looking for a price to go. Okay, we're in Asia, we're in London. Price opens right here. Two things that price can do. Can either shoot up and just go for the liquidity, then maybe you can have some shorts because we just sweep a liquidity, right? Or best case scenario, we can go downwards, sweep something, and take advantage of the longs. And that's what happened, because we have London right here at the opening, right? We have inefficiency right here, and even deeper, we have a liquidity right here. If I show you, my students were also looking at this. I have a guy that was sending this. Yes, same chart on NQ as you can see. Smart money trap right here. The efficiency and the red line, as you can see, is also looking for that. So if you go up, you short. If you go down, we long. And then short, right? He's completely getting, since he works with me. But as I told him on a little audio I sent him, I don't know if price would go that deep, right? It could, and then we have the longs, sure, good. But sometimes we might just, because of how close we are to that liquidity, we might just sweep something downwards here, just like London in this case, and go immediately up. So that's what I told him, and this is what I sent. Okay, sweep off this liquidity, as did also inducement, London, equal lows, and perhaps even touch the efficiency. And then market opens up. You already know the story. It opens up right here, and it does, I mean, some sort of a trap. Yeah, some sort of a trap, and I fell for it, right? Because if this was Forex, I would never position myself off of one sweep. But as you know, in futures, completely different. You see market opening, you see market sweeping something. If you get a change of carrot to follow the liquidity sweep, you trade it immediately. In this case, it was one of those unlucky ones, I should say, where it just get tagged in on a wick, because we're using stop orders here, and price immediately goes the other direction. So you can see a wick on that M5 candle. Wait. That. And if you go to the right, to the left, you can see that we sweep it. We do some structure right here. This equates to some M5 candles, which I positioned myself. I didn't even need to go to M1, but I'm just doing it to show you guys. So I positioned my stop order right here. The stop loss was under here, and as you can see, it got stopped out. Then it even did a more visible and conservative breaker structure, right? But it also made this as a smart money trap, because this was a trap, this would have become a trap, right? This isn't so. I mean, it happens on futures as well, but as you can see, it's 4:30 here. In futures, what you gotta understand is that once we get to the 5 p.m. UTC+2 timing, which is around 11 a.m. in New York, it starts to be that London close timing, and in futures, London close tends to deliver a trap, as it did kind of here, right? That's a little concept for you. That's a little tip. So if you're seeing your setup play out, I mean, London close might deliver your retracement, but it might do an extra sweep into whatever low or whatever high there's in the market that you're looking to short or buy from. Okay, so it did a trap right here, but this trap right here didn't end up happening on ES, and that's why we're lucky enough to remain on that trade. Okay, so I got stopped out on this at the same time that ES did the sweep, and then I positioned myself, and I was lucky enough for ES not to take me out right here, because this low, if we see, is 430, is the same low that did the trap right here, that is this ultimate low. Okay, so I was stopped out well before, 30 minutes before, but the ES setup came at this point, because ES, same thing, right? We have our higher time frame target, which is this right here, these relative equal highs. On Nasdaq it looks way better, of course, but it's the same thing. We got this massive, like not massive order block, but this order block from this massive downtrend, right? And people will definitely have their order blocks in here, and that's why price is kind of like playing around this area, is incentivizing more people to short and try to respect these equal highs. But I know we're going there, unless we want to go deeper and sweep something lower, grab more liquidity, and then eventually go up. But same thing, market opens, I'm looking at these liquidities, these equal lows, making equal lows with London. By the way, that's the same chart I sent here. I was talking about Nasdaq, but this was ES. But oftentimes the same thing. If you see here, I sent a signal for NQ, my students, and also the signal for ES. Not for them to be like signal warriors, just for them to see what I'm seeing on live and to adapt to the strategy accordingly. All right, because it's not just a bunch of theory, it's actually put into practice what we teach. So in here we have a perfect case of a liquidity cycle. We sweep the lows to go sweep the highs. Now, this was done with a bit of delay, right? The same time as we got stopped out, 30 minutes into the market open. In that first 30-minute window, that's where, at least for me, you'll get set up. You gotta let market breathe on that huge volatility, let it sweep something, and build you some structure for you to place yourself around the liquidity sweep, right? You have price moving, market opens up, does a huge gap, meaning a huge move to the downside, right? And then, and then it's kind of slows down, builds you some structure, and then boom, you can position yourself here on a change of character on M5. If you want to go more aggressive, M3, M1, but you usually see some M5 candles, and that's where I position myself. So in here, yeah, we got the sweep. As you can see, it's two M15 candles. I did a video on that, but it's the liquidity sweep, and then it does some sort of a trap or second sweep, or builds you some structure for you to position yourself, right? As I was showing you here with the drawings with the structure. So that's what happened here. We have one sweep, two sweep with M5 candle, and the ultimate high, that did the sweep of the low was this one. And they also equates to M15 high, M15 candle right here, right? This green one. I mean, I know my charts it's blue-green, but it's a candle that was going up. So my theory here, we see something lower to go see something higher. It's all about the law, cause and effect. The only bad thing here on yes was that the structure compared to the liquidity, the target, was not the best, right? Because I go for a fixed risk reward of 3, but you also got to keep in mind of your overall target. Okay, we're not just going for, okay, my fixed risk reward is 3, but I have a huge stop loss, but 3 is my fixed risk reward, so that's the target I'm going for. But that will take you, if it takes you like days, months to achieve, then you're just bullshitting, right? So in here, I see that we're taking this liquidity right here to go for this liquidity right here. But the structure allows me to place myself here, and the stop loss at ultimate goal, or refine it a little bit. If you can see these wicks, you know, this tiny little wick, I was supposed to have the stop loss here, but then I also put it a bit lower, just give it some space in case some bullshit happen. As you can see, foreshadowing this, and gave me a 40 point stop loss, which is normal for yes, but for my strategy, you know, it's a good size stop loss. It's not huge, but in terms of the structure, it is. So instead of a 3R, I only went for a 2, and I was already being a bit greedy because I know as soon as we sweep this, we're gonna deliver a reaction. And guess what? We sweep it, and we deliver a reaction, and then we go a bit higher, but then it goes even further. And as this was on a funded account and I knew we could deliver a reaction from here and I wasn't about to risk it, I just trailed my stop loss aggressively once we swept this. Right, once we did this candle right here, yeah, I put my stop loss here, and it was a good move because as you can see, price went almost to the break even. It went up again, but wouldn't even tag us on a TP. Went to the break even. Perhaps I would have been tagged out break even here because I would have set my break even here when it gets this late. Even if I hold it, I would be tagged out on drawdown because I can't hold overnight. So you can see how this was the best decision possible, right? Unless we argument something like taking profit right on the sweep, but that would be like 1.5. Not much difference. So we took a loss of minus 500 on the first funding account that we passed recently, and then the other that we also passed recently, we took we took this trade right here, and being a $500, as I'm risking 1% on each trade, which you shouldn't. When it comes to these funded stages, you should risk a bit less. But I have so many accounts that I'm willing to take the risk because to get a payout on these Apex accounts, it isn't as easy as it would be on CFD. But the good aspect about Apex is really the scalability factor of it. You can literally get accounts for $30, which will equate to 50K accounts. Right, to see how that cheap is compared to CFD firms. And so the purpose here is to get as much accounts as possible. And if you think about what these accounts cost you to get and what you're risking, then you'll be good. Because I know in the back of my journey, I used to be super fearful of placing trades even on a challenge, and I was trading a 100K account on Forex, and 100K isn't cheap, but let's say it costs around $300, not $300, like more over $400 if I'm thinking about euros. And I used to be fearful. I used to be fearful of positioning a trade 1%, even 1. Even like 0.5, and trying to save 100K account challenge from drawdown using $100 risk. And you can see how useless that is, you know. So a good advice I can give you, if you have that type of fearfulness and you're always questioning your setup, whether it appears or not, because you're getting multiple losses, and whenever you place yourself, it is another loss. You feel like market is against you. You don't feel like the luck that others are getting, but I can assure you that people only share their wins, most of the times, and there's a lot of losses in the background. Think of the challenge of the account you got, right? And do a calculation of the percentage you're risking and the overall cost of the account. Let's say, just to put it in easy mathematical calculations, your account costs $100, right? The challenge, I don't know, that would be maybe over 25k. I think that's the price standard for that type of capital. $100 that your accounts cost. Let's say you have a 10% drawdown. Let's say you risk 1% per trade. You can't be thinking 1% equates to $250. You gotta think 1% equates to $10, because you got 10 chances, 10 trades. All right, that could go bad. You know, that's your drawdown. It's 10 trades. Your drawdown equates to 10 trades, and each of those is $10, which will equate to $100 total of the price of the account. That way you'll be way more reasonable. You'll be way more stress-free, because you gotta disregard these numerical numbers and only think about percentage and risk reward wise. If you want to think it like that, then think about the cost of the challenge, okay? Because I have a student that's has a big enough personal account and is trading also challenges, starting with 10k challenges. And the problem that he had was that he was risking $100 on the personal account, but then was a bit fearful, thinking a bit of the same way on the personal account with the prop firm, risking $100 or even going down at $50. So he was being more aggressive with his personal rather than his prop firm account. And the prop firm is demo money, the personal is real money. And if we think about it realistically, the personal account he was risking $100, the prop firm account he was risking $100, but in reality those $100 is $30 divided by 10, which is $3. And then if you went on a risky trade, he would divide his risk because it was risky, but then you're risking $1.5, which makes no sense, right? Because you're risking way more on a personal. So I would just go for the bigger. I would just up the risk because he already knows how to trade, but also just think in that perspective and not be too stressful about whether you gain or lose. Okay, somebody ring the bell, but that's not for me. Boys, realize this. Once you get your funded account, your first funded account or a new funded account, whatever, your first ever trade most likely going to be a loser. Okay, you got to accept that. Your first ever trade will probably be a loser. Even on a challenge, even on a phase 2, it will probably be a loser. Now, one thing that you got to keep in mind is that it's all a probabilities game. I'm always saying this, but this is true. It's all probabilities game. We think in probabilities, not in possibilities, right? You might put a stupid trade, a super risky, not conform to your strategy trade, that's super bad, and there's a possibility it works, but there's also a possibility it doesn't work, and the probability of it is way bigger. So we are always thinking on probabilities because we know the edge is on our side. We have a profitable strategy. Okay, this is right here. So when it came to this trade right here on the Nasdaq, it was the first trade on the account. Would have been good if it was a win, of course. But as soon as I'm in, boys, as soon as I'm in and I see this rejection, as soon as even before I place it on the trade, even before I click the button, I'm already accepting it's going to be a loser. Okay, for the health of my psychology. And boys, just because it is a probabilities game, I don't have a 100% win rate, so I gotta accept it. Okay, but you can see, as we have multiple accounts, okay, we can start to have the edge on our hands if we're the type of traders that have less than a 50% win rate, let's say, and we can start to take advantage of this game nicely, right? You can go check my video if you haven't, the smartest way to capitalize on the prop firm game, and it's by getting multiple accounts and do the rotation method. So if you get a loss on one account, doesn't mean all accounts are down. It's just that one single account. You change the account, now you get a win. Now that account is up, right? Because if we match these two trades together on the same trading day, I would have been break even. But now I'm like 500 down on one, 500 up on the other. It's the same performance. But doesn't it look better in a sense? It might though. One account might be blown. But what's a blown account to an account that can give you a payout? So remember, that's all a probabilities game. It doesn't matter, like these trades are being placed on the funded, but they could have been as well placed on the challenge. They could have been placed on the demo, on paper trading. That meaning the market doesn't care about you. The market will do whatever, and you just gotta accept the outcome. Okay? You can't force it. You can't just expect a win from this, because you also lose, right? And you also win. It's all a matter of probabilities in the game. You just gotta accept it. And if you're profitable on backtesting, you can also be profitable on the live markets. It's all a matter of what you're doing. What is your psychology saying? And you might even be thinking super bad, being super anxious during the trade or whatnot. But don't you have the strength to just keep your hands on you? Like, do you really have to close on a trade or do something you're not supposed to? Just trade like you would in backtesting. If you don't do it in backtesting, you don't do it in live markets. Okay? Just think about that. And it isn't too hard. Just keep your hands out of the laptop as soon as you're in a trade. All right? Depending on your management. But ask yourself, would I do this in backtesting? And if the answer is no, then you don't do it. Okay? Because you're profitable in backtesting for a reason. Because you follow a certain pattern. But if you start changing it up, you can't expect the same results as you do in backtesting. Right? It's doing something different and expecting the same results. So make sure, whether it's a challenge, a demo, a funded account, you do the same thing. Okay? Then it's all a matter of the psychology aspect. But if you want to learn about psychology, you can go on the description. There's a full course on psychology on what really changed my trading. But to the basis of it is thinking on probabilities. That's the best it can happen for you. And what really is going to change your trading is thinking of probabilities, accepting your losses, trade like a robot. This is a game. You win some, you lose some. You just gotta accept it. Okay? You gotta stop thinking like a newbie and placing a trade because you believe it's gonna TP. Because you can literally see market playing out in your favor. But yeah, I don't place trades I don't believe they will TP. Right? I place trades that are conflict to my plan and I can see them TP, but I can also see them fail. Because that's literally put in on my data. My data says I have a 40% win rate. That means there's 60 that I end up losing. Okay? So accept that. Accept that and move forward. And don't let one trade affect the others. Because it's all, again, thinking of probabilities, it's all individual results. Each trade has an individual result. Doesn't mean because you win some that you lose the next, or it doesn't mean you lose some that you win the next. And you can't be putting the emotions of one loser towards another trade, because they're totally different. Okay? They're totally different. And backtesting, you're profitable because you're not putting those emotions towards the next trades. But in live markets is the real thing. You have emotions involved. You get emotions out of one trade and you put those same emotions towards the next 5, and that ends up blowing your account. But it isn't your trading, it isn't your strategy. It's because you're adding tiny things to the trades that are confluent, and you should have never ever taken them, because maybe you were forcing a trade. On the second, you were already over risking. The third, you were not so patient. You placed yourself beforehand, before the trade even show you your confirmation. Things like that, man. Okay. Just a real small recap on the trades, but a bunch of value and a bunch of knowledge. Okay, and I'm showing you the wins, I'm showing you the losses, because guys, I don't pass every single challenge. I don't pass every single account. Also blow accounts. Okay. Right. The other guys, they pass everything. It's all wins. It's all pretty, But I'm not one of those. If you want to think they're real or they're scammers, that's up to you to judge. But I'm just showing you here the reality, and that I'm not so far from you, because I was also in the trenches. Okay. I believe I was one of the worst ever traders. I have one of the worst upbringings in trading, just because I couldn't even get wins for months. And I was day trading, trading M5, M15 time frames, not even swinging. So you can see how sad that is. And that's why I'm not too far from you, and I can teach these things, and I can show you the reality. As you know, you lose, I lose, the others all win. Perhaps they're just not traders like us. All right, so hope you guys enjoyed. Hope you guys found value out of this video. And if you want to check more about my trading, you can check the free courses down below. Or if you want to take it a step further, you can book a call to work personally with me if you feel like you have the same issues I had in the past with psychology, mentality, or even just strategy purposes. Right. Thank you guys for watching.